Hey, welcome to today's podcast. Welcome to the show. Today's interview is definitely one you do not want to miss. Our guest is a general partner of M13. He manages the overall investing strategy for M13 with a large focus on investing in Web3. M13 has invested, by the way, in Lightning Labs, Steppen, and Milo. And our guest was previously the managing director at Virgin Group, where he was basically investing in the Americas for them, including investments for brands like you've probably heard of: Slack, Ring, Capsule, TransferWise, Virgin Galactic, and Virgin Orbit. He currently serves on the advisory board at the University of Michigan. Please do me a favor and welcome our guest, Mr. Latif Peracha, to the show. It's a pleasure to have you here.
Thanks so much for having me. Great to be here.
Hey, man, definitely. Could you just share a little bit about yourself before we dive in?
Sure thing. So I'm a general partner at M13. We are a early stage consumer technology fund, and we'll get into some of what we do, I think, a little bit later. But previously to this, I was running investments at Virgin Group for nearly a decade, and that's really where I grew up as a professional and got to work on everything from incubating and investing in Virgin brands like Virgin Galactic and Virgin Orbit, which are in the aerospace industry, to starting to buy Bitcoin in 2014, to then leading our venture strategy across a bunch of the portfolio companies that you just mentioned. And it was really during that time at Virgin that I realized, while I was doing many really interesting things, it was really my calling to go be a dedicated VC, and that led me to M13. Other than that, I'm based in New York and have a beautiful wife, 2 young boys, and a diehard University of Michigan supporter, as you probably indicated in the bio.
Fantastic. Thanks for sharing that. Before we dive deeper into everything in M13 and some other topics, can you just share with our listeners maybe just an overview for those that may not be familiar with M13?
Yeah, so we are as I mentioned, an early stage consumer technology venture capital fund. We are between Los Angeles and New York. We manage around 900 million of assets. And the focus of the firm is to understand the future of consumer behavior and invest in the enabling technologies that power that change. That is our broad mission. And then as we think about verticals, where we think about the future of money, the future of commerce, the future of health, and the future of work. Those are very broad by design. I focus a ton of my time on fintech and Web3, which is really kind of today and the future of money vertical. But we think over the next decade, it will permeate kind of all parts of the consumer economy. So just like we don't talk about mobile today as like a theme, but back, you probably remember 2010, 2011, 2012, you would invest in mobile as a theme. And I think we talk about crypto and Web3 as a theme today, but I think if you fast forward similarly 8 or 10 years, it will be, again, just part of everything that we look at and everything that we invest in. Other than that, I can tell you we write initial checks between 1 and 15 million, so broad range. We typically lead rounds in equity companies where we're taking 15% of the business and taking a board seat. And then when we invest in crypto networks, as you know, it's a little different, and the rounds are more syndicated, and we are typically more flexible, but we look to take 3, 4, 5% of the fully diluted network if we're looking at a crypto network. We also have, I think I mentioned, we've got 2 offices, one in Los Angeles and one in New York, and we are very focused on not just being really good thematic investors, but also really being very hands-on with our portfolio. So we have a platform called Propulsion, and that is meant to really support our founders in really key areas. So we've brand, data, marketing, and people and talent. And we've got world-class partners that wake up every single day thinking about our companies. And that doesn't matter if you're building a Web 2 company or a Web 3 company. those fundamentals are really, really important as you're trying to scale a company. And so that's been a tremendous value add and something that gives us, we think, a real edge when it comes to supporting our companies.
Absolutely. No, I definitely agree. You touched on Web3. I wanted to ask you about your own personal history in Web3.
Sure. Yeah. So I mentioned we started buying Bitcoin at Virgin in 2014. But what's interesting is there wasn't any really financial thesis back then. There wasn't like the digital gold thought or L1s and L2s. It was very, very nascent at the time. And for us, it was actually a social experiment because we had this idea, or the thing that blockchains represented to us was these immutable records, which actually meant that if you own property in Syria, which actually at the time was going through quite a big civil war, or in another non-democratic state, you could always have a record of that property, and that could never be taken away from you. And that was a really interesting idea that blockchains represented, and Bitcoin was a way to get like exposure to that idea, and that's why we made the investment. And then we woke up, a couple of years later, and kind of looked at the ledger and said, well, how much is this thing worth again? And so that was a good investment, and then went further down the rabbit hole and got into Ethereum, 16, 17. And actually, I think everyone has that moment where you realize that there's something pretty interesting here. And for me, I actually bought a ticket on a whim to this event called the Token Summit, which happened on NYU's campus in early 17. And I spent a day in this room with some tremendously famous people in crypto today, but at the time, it was still all very nascent. And I walked out of that room really believing that there was something fundamentally, important happening in this market, and have been perpetually down that rabbit hole ever since. And here we are, 2022. Really feel like there isn't much existential risk anymore to the market as there was back then, and now it's where's it going to go from here?
Man, what a story. Thanks for sharing that. I know now, now we're talking trillions for market cap, of course right now it's around 1, but we've seen it higher than that, to see the market grow from when you first, got in or started buying Bitcoin in 14 to now. I wanted to ask you, Latif, for our listeners, what would be the number one piece of advice that you would have for someone that might be, I don't know, maybe starting a firm like yours, or maybe just trying to invest, at a little bit larger investment amount? You've been in the industry a long time, and you've played a part in many different investments, so your wealth of wisdom for everyone watching.
Yeah, I don't know about that. I'm learning every single day and trying to learn from, mentors of mine. But what I would say related to the crypto market, if you're new to the market, I think the best thing to do, and I usually say this is not financial advice, but you asked the question, so I'll answer it, is probably just buy Bitcoin and Ethereum. I think those are just tremendously, really, really good long-term investments. Almost like you recommend someone buying, just buy the index, buy the S&P. I mean, I think it's like that, but this has way more upside than say, buying an index. And then what that does is it makes you pay attention. The moment you have a dollar into something, you just pay more attention than when you don't have a dollar into anything. And so that's my first advice. Depending on how much your risk appetite is, you can figure out how to size it. But I think it's got tremendous upside. The L1s I think are really, really interesting. They're public to everybody, but they still have what I think is still venture capital type of upside. So you're getting something that is got real, I think, good risk reward. And by the way, unlike venture capital, traditionally there's liquidity. So at any point you can go on and there's Bitcoin, there's Ethereum. We are very bullish as a firm on Solana as a L1 system. And you can go on, you or I or my mom or whoever can go on and buy it and hold it or sell it when you feel appropriate. And I think that's a very interesting feature of the market. Comes with some downsides, which is, can kind of drive you crazy. It's 24/7 global market, a lot of volatility. But if you figure out how to manage that, I think it's a real
Well said. Well said. I definitely like what you touched on. If you have a dollar in anything, I mean, it's just that action step of moving forward. I'll tell you, I get asked all the time, especially when I'm out in dinners and stuff. People ask me, what's the best crypto to buy? And I always bounce back the tennis ball in the discussion. And I'm like, well, it depends on how long, what's your strategy? You want to be in just for a moment? You're looking for years, you're looking for the long game, like a decade. So,
Yeah,
but I really agree with the Bitcoin and the ETH.
I think
That segues.
one of the great lessons of
Go ahead.
investing, which relates to, they didn't teach me this in business school that well, but I mean, just compounding is the most powerful thing in investing,
Oh
whether
yeah,
you're talking about venture capital, your public portfolio, your liquid crypto portfolio. Just having, if your
yeah,
time horizon is long enough and you're investing in good things that got good tailwinds behind them, they will
yeah.
compound. And so that's how I think.
Definitely, compounding is powerful. I wanted to ask you about your thoughts on crypto VC versus, say, traditional VC. You know,
Yeah. So for those that may not be familiar, traditional VC as a industry is basically you raise money from LPs, which are limited partners or investors, and they lock up that money for 10 years. You invest, if you're investing like in seed or Series A companies, it's a very unique asset class in the sense that the mortality rate is very high. About a third of the companies go to zero. About a third of them you get your money back, and about a third of them, all the returns on those companies, which is this idea, which is called the power law. But it's a very illiquid market, and those exits you invest day one, it's like basically year seven is when you start to see that liquidity in those exits. And along the way, there's ups and downs, and you have, as I said, many of these things don't work out, and so that's just a very
yeah.
long cycle. But it is a
Oh yeah,
cycle that rewards people because the returns in venture, if you're in the best funds, the returns are very, very good. 35%, 40% IRR. 5x plus cash on
yeah,
cash, and that's great. And you get the added benefit of investing in the future advancements for mankind. So people like being involved in technology investments. With crypto, it's just so different in the sense that first of all, the rounds that get done are more syndicated, so there's more investors in any one round or network. They
mm,
typically are governed by a token, and that token becomes live the moment the network goes live. And so you have like
yeah,
all the ups and downs of a startup, but then you also have this token, which is part of the story and can be liquid, although there are lockups and everything else. And so what you
yeah,
end up having is a an asset class that is extreme VC. Like crypto is extreme VC. The liquidity cycles are shorter, about half as long. I think the upside potentially is much greater, given you are investing in pre-launch of these networks. And the whole promise of Web3 is that if you have a token economy that is governed by one or two tokens that users and investors and management teams all participate in, those can be really, really powerful networks. And so,
oh yeah.
the upside is pretty great in this market.
Absolutely. Yeah. Thanks for unpacking that for our listeners. There's another topic I wanted to ask you. I know you have a lot of expertise in like macro environments and the crypto cycles for that matter. Do you have any thoughts on this
Yeah,
topic?
so it's interesting. If you look at, you mentioned $1 trillion asset class, and it was three,
Hmm.
but guess what? Like 5 or 6 years ago, it was not even 100 billion, maybe around that. I mean, this asset class started a little over a decade ago with the Bitcoin white paper, but it wasn't until like 16 that there was any activity really. 16, 17 when Ethereum became, this second big chain after Bitcoin. And so you've got $1 trillion asset class that's basically come to being in the last 5 years. And I think if you are anyone who pays attention to markets or anyone who's curious and as an investor or even a builder of companies, you have to be looking at this market. It's really, really important. And so there was a lot of risk in 17, 18, but I think a lot of that risk has gone away because institutional money is coming to the market. Every major endowment and pension fund is looking at crypto. All the talents come to the market, and not a whole lot of it's leaving, this time around. And we're finally seeing like applications, whether it's DeFi or NFTs. We're finally seeing applications that are here. Still small, still a lot of issues that got to get worked out to get to mass adoption, but the applications are on their way. And as a consumer technology investor, we like that because we feel like the returns are coming up the stack and the investments are going up the stack, and that's really, really cool to see. And we're kind of on that journey with everybody else.
Absolutely, and also a payment system. The instant finality. Some of the blockchains, it's I know Bitcoin was Gen 1, so to speak. But the payment systems that you can use crypto for payment, and the global companies, they're now accepting it. It's not just investing or holding or hodling. You can actually purchase and for your lifestyle, like Travala.com. You want to travel, you can pay dozens of cryptos you can choose from. You can buy cars now. I have a friend that just bought an SUV in Canada. He just pulled out his phone and sent the Bitcoin to the owner.
Yeah.
So
it's interesting that's happening more and more. I personally am not like a huge. I wouldn't do that because I think that holding the Bitcoin is just more valuable.
Right.
But I see why if you've got excess, crypto, why you may use that as a mechanism for transacting. And we're in this company called Lightning Labs, which you had mentioned in the beginning, and that is a really interesting infrastructure company above the Bitcoin protocol. One of the original, probably the original L2. And we're a pretty big shareholder in that company, and that's a really, really fascinating business because it allows users across the world to interact and send Bitcoin. And now they've just released a product called Taro, which allows you to send not just Bitcoin, but non-Bitcoin assets, whether that's stable coins or even fiat, across the world instantly for fractions of a penny, and with no intermediary. So that is a pretty amazing advancement in technology, and we're really excited to see all the applications from the developers that are building on top of the Lightning Network right now.
I love that. Borderless. You can send funds around the world in real time for, like you said, a fraction of the cost and speed.
Yeah.
I wanted to bring up the incentive economy because I know M13 has different investments in this area, and I wanted to get your input.
Yeah, so the incentive economy is sort of moniker for these token networks, and my original excitement around Web3 and crypto was around this idea of alignment of users and investors and teams. And we actually put out a paper last year called Crypto and the Consumer, which I recently reread, kind of a little bit scared that it was going to feel very dated because you write something in crypto a year later, you're going to look kind of silly potentially based on how fast the market moves. And for the most part, I think the paper held up.
That's true.
We talked about Twitter, and I know Twitter is a very popular topic these days, given what's happening with the go private with Elon. But the reality is, Twitter to me was the best example of imagine if this was a Web3 network, and imagine if instead of having an advertising model or even a subscription model, which is what they're thinking about now, imagine if you just had a network that was governed by a token, and if you were an active consumer, participant, follow you had very popular tweets, there was a way to incentivize you and reward you with a native Twitter token. And that would be a way to, if you think about network effects and you think about people coming to a community, if you actually governed it through a single token, it would generate an even more powerful network. Like, to me, Twitter at a $40 billion market cap is actually incredibly cheap given the amount of information and power that sits in that network. I mean, you work in crypto, crypto lives on Twitter and lives in Telegram, basically a little bit in Discord. That's it. So just
and YouTube.
If the crypto economy is worth $1 trillion, and a lot of it's
Yeah.
governed in this one network. Well, how is that? And there's other stuff that happens in that network. How is that network only worth 40 billion? So anyhow, all to say that was what got me excited by this idea of like governing networks through tokens. And now we're finally seeing this happen, although it's imperfect. We are investors in a company called Stepn, STEPN,
Uh,
which is based in Australia, and it's this fitness application that required you to buy an NFT. It's built on Solana, and then it would incentivize you to get healthy through outdoor activities. And this was a completely transformational application that is one of the biggest Web3 apps. It had 4 million monthly actives, a million daily actives this year, and it's still doing well, although it's lost a little bit of its steam. And the reason why I think it's
okay.
lost a little bit of its steam, and we love the company and we think it's going to go to great heights, is because the token designs are not yet totally figured out. And so I look at Web3, and these tokens basically represent an incentive to get people into a network. Now we got to figure out how do you retain a user in this network, and
Yes.
that's still a work in progress. And we're really excited to continue to invest in great teams like the one behind StepN that are working on interesting token designs for networks.
Fantastic. Yeah, we look to see what the future comes from stepping, I wanted to ask you about onboarding people into crypto and the future of NFTs. One of the reasons why I started the show was actually to help people navigate once they're onboarded into crypto, because it's not the easiest thing to navigate for a non-techie person, you know.
Yeah, sure. So here's a kind of ironic thing about this market. It is so advanced technically. The people that are in it are, generally very, very technical, software first, engineering first. But the reality is, it is in many ways very archaic. Like you can really only do it from your computer. It doesn't really work on mobile. I mean, you have a Coinbase app, but like there isn't a whole lot of crypto activity on your mobile device. And that is like a really big fundamental problem because most of the world doesn't sit in front of a computer. In fact, if you look at mobile penetration globally, if you look at a lot of the activity in Africa, just completely skipped the desktop and went straight to mobile. And so I think
Mm-hmm.
until we figure out how to better do mobile, including discovery, including usability, um, there's going to be a fundamental issue with onboarding of like a billion users into the market. Today, I think there's
Yeah.
probably I think there's 45 million. Let's just talk about America for a second. There's about 45 million Americans which own Bitcoin, which is a pretty good number. But if you look at applications like NFTs, which we could talk about in a second, there's really only 5 to 10 million globally. So it's still very, very small. So I think
Yeah.
mobile's got to get worked out, and one of the reasons why it hasn't is
Okay.
because Apple and Google are these gatekeepers, and they make it very hard to work outside of their app stores. And if you're building a crypto
Yeah.
app, you don't want to pay 30% of it to Apple or Google. That kind of defeats the whole purpose of these decentralized
Yeah.
networks. And so that needs to get worked out. We got a couple ideas on how to do that. Maybe I think there needs to be
Okay.
a new version of what is a mobile optimized website, so people don't have to go to downloading apps and just getting users to kind of understand that behavior, but needs to be a bit of an evolution in how you design those. I think that could be really interesting.
Okay.
So that's an area we're focused on, is like who's building really great mobile experiences in crypto, because that's a big gating item.
Absolutely. So let's talk about adoption for a moment then. How do you see adoption playing out in the future in like 2023, beyond to 24, et cetera?
Yeah, so I think 23 is going to be fairly dormant, I would say, from a growth standpoint. If you look at the exchange volumes, they're way down, and that's not surprising in a bear market. People that hold crypto are just holding. Liquidity's down, so whether you're Coinbase or Binance or Crypto.com, all those exchanges have had serious drawbacks in their volumes. So I don't anticipate 23 to be a year where you're going to see tremendous growth in activity. You will probably see increase in Ethereum and Solana wallets, but I think it will probably be in 24 where you see the market come back, and that's me, really just making a guess, because what I'm pretty convinced about is until interest rates come down, until geopolitics and a bunch of other macro stuff work themselves out, the crypto market isn't going to magically just have a resurgence while the rest of the market is down. And in fact, it's quite the opposite. What's interesting is crypto market has had its cycles, the multiple cycles of the bear and bull markets, but the macro has been one bull market the whole time. And so this is the first time crypto has actually had to face a bear market in the broader economy. And so that to me tells me probably a longer downturn, but when it comes back, I think it will be explosive. I think it'll be in 24, and I do think it will be led by an evolution of NFTs. And NFTs, even the term, I think probably needs to go away at some point, because all it means is like you're buying something that you've got proof that you own on chain, and if you sell it, there's certain things that go to the buyer. And so I think at some point here, the next 2, 3, 4 years, we're going to stop talking about Web 2 or Web 3, because consumers don't care. They just want to have good experiences. And so to me, you got to kind of obfuscate the technology side of it and just make the experiences much better. But I do think it will come broadly in NFTs.
Okay. What are your thoughts on Solana?
Big fan of Solana, and we don't make these judgments in a bubble, like sitting and reading about it. I mean, the reality is we invested in StepN. We've invested in a couple other companies around the Solana ecosystem that are built on Solana. And so for us, if you can invest in something interesting and you're like, oh wow, this is what's going on here. How are these guys built? What are they built on? And you realize that Solana is the fastest and by far the cheapest layer one. It provides real advantages to any builder building on top of it. Now, they've had their own performance issues. They've had some outages, but they come back very quickly. And they will solve that, I think, in time with just kind of typical growing pains. But the L1 itself is incredibly unique from the value proposition to a builder. And we're investors in a company called Flipside Crypto, which is analytics, basically an analytics company for blockchains, and they incentivize developers to come build in these various blockchains by giving them like a bounty. So a bounty that Solana, for example, is a customer, and so Solana, will provide Flipside with a grant that says if you bring developers in, you can grant them these Solana tokens for interesting applications that they're building. So we see some of these things that are happening, and despite the fact the market's down, Solana's went from 220 to like $30 right now, so Solana's whatever 85% of its value. The developer activity has remained incredibly strong. In fact, I feel pretty bad right now because I'm sitting here in the States and there's an amazing conference happening in Portugal right now around Solana, and I should be there, but I'm not. And I know that's going to be a very vibrant, week in Portugal. So it's a global, amazing community, and we think, you've got Bitcoin, you've got Ethereum. We feel pretty good that Solana will have enduring value and be one of the real chains that will sit alongside the other two.
Absolutely. No, I definitely got to agree. And I wish I was there with you in Portugal. Eu falar português.
Well, you're in Mexico City right now, so I know you're on the move. So hopefully you get this.
Staying.
Well, we'll go next year.
Staying busy.
We'll go next year.
Absolutely. So what's the best way for our listeners to reach out to you and your team to stay in the conversation and, follow you guys online?
Yeah. So my Twitter, I will admit, I actually am pretty active on consuming content, but I am not a massive pontificator on the network. But you can certainly find me at Latif Peracha. And then if you go to M13.co, which is our website, there's a ton of information on our firm. You can search by Web3. You can see our whole portfolio. We've made about 20 investments in companies all over the world, Australia, Shanghai, clearly here in the U.S. and we will look to be very, very active as this consumer infrastructure layer gets built out, and hopefully we get to those amazing applications in the next few years. And I'll leave you potentially with something which is, I strongly believe that, we had Uber and Airbnb and all these networks that came out of the last global financial crisis and downturn. They are like the big brands that we all know and love and have come around in the last 10 years. It's my view that in this next cycle in crypto, the next generational brands will be Web3 crypto networks, and they'll be global and they'll be way more powerful because they'll be built around a token design versus much more archaic business model that is what Airbnb, which is, by the way, an amazing company, and Uber, but that was built on a very legacy kind of business model. And so that's my prediction, and it's our job to be there to find hopefully those companies. So if you're building, if anyone out there is building one of those, please please reach out.
Definitely. Latif, is there anything else you'd like to share with our audience?
No, I would just say, be optimistic. It's easy to be pessimistic right now, given what's happening, macro, what's happening in crypto, what's happening, geopolitically around the world. So I would just say, I know you've got listeners of 129 countries or something. So
almost 170 now. Yeah.
I'm off by 50 there. So just be optimistic and continue to pay attention to this market. It's easy to forget about it when all the headlines go away, but this is the time when the builders are going to be building, and if you're interested in investing in the market, this is also a time when prices are certainly more attractive than they were. Although I will again make a disclaimer that this is not financial advice. So stay positive, and we'll see you in the next upcycle of the market.
Well said. Thanks for coming out and being on the show, and we welcome you back anytime.
Thanks so much.
Hey, if you like today's episode, definitely like and subscribe to the podcast, show your support, and chime in here tomorrow for another special episode. Until then, make it a great day.